Yo, what's going on, boys? Charney here with another YouTube video. It's been a minute since I've done a weekly recap, to be honest. Markets have been pretty dry, and my main priority was just loading my Discord with as much content as I possibly could. And I'm currently still working on that. So not as much chart stuff on my YouTube, but I am going to do this weekly recap here today. And as you see, we have gold on the screen right now, and this is the first setup of the week. So Iran deal has been closed. It has been signed off that both parties agree to it, and I believe the final signature is Friday. I believe so. And yeah, everything's going good. And funny enough, with there being a deal, this week was the week that I've seen the most setups, and I've almost taken them, a good 2 or 3 of these setups this week. And it's just funny. It's like as soon as this deal was signed, I did see oil. I'm able to start trading oil again, and oil starts to trend cleanly. Gold wasn't too bad. NQ trending cleanly. And JPY, this should stop the intervention of the JPY, because it was a strain with oil prices when they were really, really expensive. And now that oil comes down, as it takes a little bit more time, the JPY pairs won't have to intervene. And that's when, you come over here and you go on, and I've showed my Discord this multiple times, but if you go on the 4-hour time frame and you look, let me actually go down to the 1-hour time frame. This throughout June, this was all interventions. This stuff, these random wicks coming in, these wicks, these wicks, these wicks, these wicks. There's not too much we can do here, and it's completely random, and it screws up price to where the entire price is just now this. It's just kind of these sideways with these wicks, and even though this is slightly trending, it's mostly just a bunch of wicks, and there's no real market structure. So as oil prices come down, this will stop happening, which is amazing. This is great, right? The Euro JPY, you guys can see it back here in May. This is all that it's been doing. So people saying that, oh, this war doesn't have an effect, and that's not the reason, market conditions are a little bit dry. It is, quite frankly, the reason. You guys need to be doing a lot more testing, and you need to understand world economics a lot more deeper if you think that. You have to understand that oil prices absolutely affects the Japanese yen, and when the yen is intervening, it creates charts like this. It creates charts like this. It creates the UJ chart that I showed you, and quite frankly, random stuff like this. You guys can see it. It's complete random wicks, completely random. It's completely random, and they happen on each and every single one of these pairs here. You can see it happening back in May, as well. So to say that it doesn't have an effect, it definitely has an effect. Okay, now that the war is over, we see oil prices dumping, right? We see oil prices coming down a lot. So this is good. This is a great sign. We want oil prices to keep on dumping lower, and lower. This is amazing for the economy, and not just the economy, I should say, more or less our trading strategy, because that's going to cause the yen to stop having to intervene so much, because that was the main cause of it. That was initially the main cause of it. So you guys got to understand, oil was untradeable for the last 3 to 4 months. Oil produced 134 trades in the last 4 years that I have tested within my 4:30 a.m. to 10 a.m. Time. I've showed my Discord the 4 years of trading strategy, or the 4 years of back testing on every single pair on the 5-minute time frame, 4 years in a row, collected them all together to show the whole Nova model as a whole. And it's really just liquidity, supply, and demand, with just a couple basic filters to help you filter out the bad trades. And again, anyone new that's watching this YouTube video, I always do go over my entry model. My entry model is something like this. We want to find trending markets, and you want to see a sweep of liquidity, a tap into a demand zone. And once we get that tap into that demand zone, if it is valid, there's a couple things that make it valid. And I have a YouTube video breaking down the actual entry model. It can't close inside the zone, just has to wick inside the zone. And if we get that bullish close, and this liquidity is valid, and this liquidity took out its own previous higher low, or lower high, then then that is a valid trade, and we long that position to follow with trend. And this is happening on the 5-minute time frame. Now you might be asking, okay, why does this work? Well, when markets are trending up, you need to seek opposing liquidity, and you need to take opposing side liquidity to actually continue that bullish order flow. So in instances when it's bullish, right, a lot of times we're seeking opposing order flow, or we're seeking opposing liquidity, and opposing liquidity sits under these higher lows, right? So our job as traders, and what I teach in my Discord, is how to find what types of liquidity. Is there's actual liquidity, or does it just look like market structure, right? Are we just going to take this liquidity, tap into this demand, or continue up? Or is there something resting down here that we need to go and take, you know, or is, you know, other narratives going completely against us on the 5-minute time frame? A lot of stuff goes into it, but that's the core understanding of it, and it's a very basic entry model. So that is my entry model. And oil produced 134 trades across 4 years. It's our pair that gives us the absolute most. And again, this was traded at strict 1 to 4s, 4:30 a.m. to 10 a.m. Eastern Standard Time. And oil had to be completely cut out for the last 3 months since this war, because quite frankly, with oil as good as it is, if you guys really zoom out, this was all that's been happening. This is all that's been happening in it. And then if you go and take a closer look, it's all moved by macroeconomics, and then it's moved by quite literally day-to-day Trump tweets. This is the main thing. This is the whole thing that the war is about. So if you guys don't think every single little tiny headline and every single tweet matters, yes, it does, okay? You guys can see all of these wicks, just complete randomness, and this is on the hourly time frame. So these are going to be massive. You know, you go down to the 5-minute time frame, it's every single day. It's just kind of absurd movements that are not normal, and it's not quite following technical analysis, and it's not quite following any algorithmic type of, you know, price action at all, right? So I personally stayed out of this. I have a couple trades marked up that I skipped, that I kind of go over my YouTube and why they lost and stuff like that. You can see a trade right there, and stuff like that. But I haven't been trading this, and now I am going to be trading oil again. So, you know, you cut out your pair that you trade, quite literally actually has the most trades across the 4 years. You cut that out completely. That's going to slow a little bit of things down. These JPY pairs were mostly untradeable for the last 2 months, like quite literally mostly untradeable. Maybe 2 good weeks of price action on each pair across the last two months, if that. Completely kind of just untradeable. So, you know, you cut your pairs list down completely in half now. Obviously, it's going to be slow. And people trading the strategy, if you guys don't think that it's, you know, it's crazy to have, you know, a month without trades, sometimes you can have that. We've had that in 2022 on every single pair. We had one trade pop up, and it was an oil trade across an entire month. And at this point in time, you have to understand we're not trading oil, and we're not trading any of these JPY pairs. So it is totally valid for us to have dry market conditions, completely valid, you know? And having the data on that will show a time period where, hey, it was dry with no war, with all of these pairs tradable, right? Where we're in a market now with only half of our pairs are tradable. So of course you're gonna have a dry period. Of course you are, and you only know that if you get the statistics on that and you backtest and gather that data. But a lot of you guys do not want to put in the work, and you do not want to sit there for hours a day backtesting, gathering data. And you're gonna wonder, and you're gonna actually, you know, wonder if it's dry, if it's the strategy, if you should strategy hop, or, you know, what results you should even expect. You guys don't even know what your win rate is across a couple years, genuinely. You don't even know if you have an edge. You know, you're listening to someone else on YouTube telling you this strategy works. You guys don't even know if you have your own edge. So you need to go and test things. That's what I tell everyone in my Discord is test as much as you possibly can, and have that data, because it's never going to hurt you. Once you have the data, no one can tell you anything different. I have the data. Someone will come to me and tell me that, hey, your strategy's garbage, this and that. Okay, just laugh it off, bro. Go about your day. Like, I have the data, and no one can take that from me. I know I have an edge within the market, and I've seen it play out live markets. I don't care, you know what I mean? And if you guys get your own data, no one can take that from you, bro. No one can take that besides you. You truly know if you have an edge or not. So, I know that oil is a massive producing, it's a asset that produces a lot of trades. within my trading strategy. So does all these JPY pairs. And guess what? They're all untradeable for the last 2 months, just about. So that leaves us with 3 pairs: gold, NASDAQ, and US30. And with these 3 pairs, they're fine. But remember, you're only trading 3 pairs. So can you have a dry period? Of course you can. You know, can you have a period where a lot of these markets are moved by, you know, tweets and speculation? Of course you can. So it's by no surprise that you have a dry month or two. Like genuinely, you're speaking in the terms of years, and you're mad that, you know, we go into a full-on war with another country, and over oil, and you're kind of shocked that there's no trades for a month. You know, maybe a month or two. Oh, it's, you know, it's dry for this, you know, month or two. Of course it is, bro. Literally, of course it is. And I've gave you guys all of the actual physical reasons why. You know, it's oil prices, it's Japanese yen intervening, it's oil being moved off of all these headlines, so it kind of makes it untradeable. So that's kind of the background of it, and that was kind of, you know, all kind of solved out this week. So it's obviously going to take a little bit for the Japanese yen to, you know, kind of cool down and stop doing what it's doing. Oil, I do believe it's kind of tradable again, and I'm going to take advantage of it being bearish, so I am going to be looking for shorts. But yeah, that's kind of the breakdown here on what happened this week. So let's get into the actual trading side of things here. So let's replay the markets a little bit. We'll replay it to right here. We'll replay it to. So this is a trade that I did skip. So again, gold 5-minute long on Monday. So this is, oh, actually, wait, no, let's go back to this trade. So back to this trade right here. This is the things I was exactly seeing. I zoomed out and I was like, okay, gold is overall bearish. We are overall bearish. And I'm not going to get into too much specifics again, because I keep a lot of the actual, you know, in-depth teachings in my Discord only. But there was this draw on liquidity that I felt as if price was going to take. And that was a main factor that from there, that is the main thing that price is going to go and chase until we follow this bearish move here. So I was very skeptical of that. And but at this point in time where this trade was, we did not take that yet. But the 5-minute time frame is bullish, but I understand at some point in time, the higher time frame is going to kick back in, and we are going to continue with bearish market structure. So at this point in time, a trade popped up, a bunch of consolidatory liquidity, a bunch of liquidity. Price came down, took out that liquidity. Great reaction. Everything looks fine. The only thing here is there was something lying underneath it. Price moved inefficiently underneath it, and it left imbalances within the market, and the market is attracted to imbalances in orders. And again, I'm not going to get too much depth on YouTube, mainly just for my Discord, but that is the reason I skipped it. There was an imbalance of orders underneath us, and price needed to fill that. And on top of that, if I give you guys some sauce, a lot of times when you see smaller time frame candles like this shoot up like this randomly like this, a lot of times these orders hold a lot of volume right underneath them and hold a lot of liquidity. So that's why a lot of times you see price come down to seek that actual liquidity before continuing up. So after I saw those things, and paired with a little bit of intuition of how this liquidity formed, I just didn't really like the looks of it. I skipped this one. I just kind of skipped this one. I did not like it for those 3 reasons there, and this trade did end up losing. So if we get out of replay mode, I'll just go to the next trade on gold here. This next trade on gold was this setup right here. So this was a setup that I personally was not interested in. So I told you guys in the 4-hour time frame, we have this massive draw on liquidity, okay? Price comes up and takes that massive draw on liquidity. So now on the 4-hour time frame, we have done mainly what we've needed to do to continue this bearish trend, right? When things are trending bearish, a lot of times we're seeking opposing liquidity. This right here literally is our entry model, except on the 4-hour time frame. That's how the markets move. You have to seek opposing liquidity. So when you're trending bearish, you have a bunch of opposing liquidity right here, and we seek that, right? We go and take that. This right here, you have a bunch of opposing liquidity where? Up here. You don't really have anything else. And this movement already is very overextended, right? I don't see us taking this draw on liquidity and coming the whole way up here and trying to take this draw or this draw. I don't see that at all, right? We already had a very extensive move. From there, we have a nice draw on liquidity, and we take that draw. We take that draw right there. And after we take that draw, okay, now I can understand on the higher time frame, we've done mostly what we've needed to do to continue that bearish structure. Okay, so now on the smaller time frame, I'm skeptical of taking longs. And right here, I see the structure actually shift in front of my eyes. You see price giving you higher lows, higher lows, higher lows, right? And eventually, what does that do? This bullish structure snaps, right? Right here, we take out that last internal higher low, right? So this bullish market structure right here, after taking that major draw on liquidity on the higher time frame, it is officially over, right? It is snapped right here. So at this point in time, we have went from, again, making higher lows to now creating a lower low from this low. So there's a couple things you need to understand, and I'll make this on the 15-minute time frame. I'll draw this out. At this point in time, just because this flips, it isn't, unfortunately, I wish it was this simple, but when this flips, it isn't just going to be like, oh, lower high, and now we're continuing bearish, and now this is clean, and if we continue bullish, oh, we take out this high, and now we're going to continue bullish and continue up. Markets, unfortunately, on smaller time frames like this, don't move that clean. It's a lot of choppiness, unfortunately. But you still get the idea of this is a bullish market structure, right? Now on the higher time frame, we've done everything we needed to do for this internal retracement. We have taken major draws on liquidity. Internal, we have switched bearish. At this point in time, I am looking at this as a bearish trend now. So what I see is I see price retrace, okay? And if I go to something like the hourly time frame, actually, let me go back down to the 15-minute time frame. From right here, I can see that after price has taken this low, okay, now I am bearish, okay? Now I understand something. After we take this low, just like this, we're gonna have a retracement before continuing down. In this case, we had a little bit of ugly price action because, again, markets aren't perfect, and we ended up moving sideways a little bit, took this draw one more time, and then price action absolutely dumped from there, okay? But during this time, right here, we had a long position. Now, why did I not like this long position? Well, higher time frame, I already told you we've done everything mostly we needed to do. Now, we're fully bearish on the lower time frame. And why are we retracing? Well, we're retracing because this is a pretty overextended leg. And what happened here again? What is this? Well, price moved inefficiently, right? Price moved inefficiently, and a lot of time price is attracted to those inefficiencies. So we come back up. Now, just because we tap into that inefficiency, does that mean right there, instantly we have to dump? No, but this is still not a place I'd long to, because you're betting on bullish price action when there's quite literally no reason to be betting on bullish price action at all. There's zero reason to be betting on bullish price action. And if you look at it, it never continued bullish. We continued with bearish price action. We followed through with the trend. So your bias is 100% correct. And this is one of those trades that your bias can be 100% correct. You can get an ugly setup kind of form. And guess what? This trade does end up hitting TP. And these are one of those trades that you have to be comfortable with, because if you take 90% of, or if you take all the trades that are like this, there's no statistical edge at all. There's completely no statistical edge. And I know that from all of my testing. So down here, this is the entry model that you guys see. You see this demand, you see this level of liquidity, this high, take out these levels right here. So this is valid liquidity. So you see price take liquidity. And for me personally, if I was to enter this trade with a bullish candle close that low like that, honestly, I would personally be waiting for a break of candle on that next candle. I don't really like that bullish candle close. That wick's great, but that bullish candle close really throws me off. So if I had to enter this trade, it would be something like that. But regardless, if you took this trade, I think if you were aiming for a 1 to 4, it would have lost. Yeah, so if you were aiming for a 1 to 4, which is standard with all my back tests, this trade would have actually lost because you continue with the bearish trend. Now, if you would have entered on this bullish close and have your stop loss right under the wick, I believe that this would have just nipped a 1 to 4 and you would have been good to go. Just about, pretty much. We'll call it TP hit. So yeah, this is one of those trades that, you know, you gotta be cool with letting it pass and understand the probabilities and the statistics is completely stacked against you. You shouldn't be worried about the outcome, right? You shouldn't be worried about the outcome because if you have the data in the first place, you understand that there's no statistical edge of taking setups where everything's pretty much completely against you, right? Like I said, we're now in this imbalance. Just because we're in this imbalance doesn't mean it has to crash right here. We can consolidate it in this imbalance, and that's exactly what we did. What did we do? We just consolidated in this imbalance, and then we continue down. Within that consolidation, there might be just enough where we can move up just to maybe, you know, snatch that TP and then continue down. That's not a trading strategy, bro. You know that all the odds are completely stacked against you, and you're just trying to, you know, you're trying to get some hopium and trying to hit TP there. All the odds are kind of stacked against you, and like I said, entering how I personally would have entered that would have never hit TP. And to be fair, I actually don't know too many people that did take this trade at all. I do think a lot of people was actually looking at the higher time frame and understood that it is bearish market structure, and that's exactly what we continued out doing. So yeah, that's pretty much it there. So that's that on gold. And this was the setup on gold Tuesday, the setup on gold Monday. Let's go over Euro JPY on Tuesday. So this was a trade I was literally about to enter, very close to entering, and I did not, off of a lot of intuition, to be honest. Genuinely a lot of intuition. Okay, so there's a reason that price consolidated before continuing up and did what it did, and I explained it very well on my Discord. I'll give you guys a really quick explanation, the very shallow version of it. If this liquidity doesn't hold enough orders, okay, a lot of times you'll see reactions like this, okay, after taking liquidity, and then it slowly comes down to zone and gives you a little entry candle, and there's just not enough orders sitting right there for price to take and actively move. So if it doesn't do that, a lot of times, if the trend is still bullish in the lower time frame, and if we're going to go make another high, if there's not enough liquidity right there, we have to generate liquidity. So what do you see here? That's all I'm going to give you guys, okay? And I saw that. I kind of judged it purely off the reaction. I told the Discord in the morning analysis that I was watching the zone. I actually like the zone, and I was like, I always say I'll judge it after it takes liquidity. I'll judge it as it's reacting off the zone. That's a real thing. A lot of you guys are way too mechanical, and you're just like, oh, if it takes my liquidity and taps to my zone, oh, it's technically valid, it's mechanically valid. A mechanical entry model will only get you so far. When are you going to use your human edge, bro? When are you going to use your human edge, right? God, the creator of all things, has designed the most brilliant thing, which is your brain, okay? And your brain does the job of seeing pattern recognition over and over and over again. That's the whole point of building an edge in the market. Human edge that no one else has, bro. If the strategy was mechanical head to toe, then a beginner could perform the same way a person of 10 years can perform. You have to use your human edge. So use what God has given you, your brain, study pattern recognition. And how do you get pattern recognition? From watching setups play out live and from back testing over and over and over again, which I know most of you guys do not have enough back testing data, okay? So as you see them play out more and more and more, your brain builds pattern recognition of being like, when this candle forms like this, I swear I've seen it play out a couple times like this. I just don't like it. That is a complete real thing. Your brain has pattern recognition, bro. Your brain genuinely has pattern recognition. That's what your whole entire life is built off of. That's how you know how to drive, okay? Pattern recognition. You have memory, and you're used to the same patterns, and your brain just automatically goes with the flow. You build the same thing in trading. You see the same things play out over and over and over again, and you start to see a consistent outcome. Okay, if candles form this way, I just don't really like it because I've seen that 100 times, you know? If candles form this way, I really like it because I've seen it 100 times. You have to have your brain build pattern recognition. And this really came into fruition for me at this point in time. And I was just like, yeah, I don't like it. I don't like it. That liquidity is not holding enough liquidity right there. It's probably going to generate liquidity. And if it generates liquidity, it's going to consolidate, and consolidation leads to stop loss 9 chances out of 10. So that's why I skipped that trade right there, honestly. And at this point in time, everything was in trend at this point in time. Euro JPY did not fall to make a higher time frame lower leg yet. We were still fully bullish. So yeah, that's literally it. That's genuinely it. So that was Euro JPY. And again, all of these are losing trades besides the Tuesday one so far. And when I go over all of these, those are genuinely all losing trades. So if you would have taken all of these, you would have actually ended, the week down 1 or 2%, even taking a winner. So let's go over the Tuesday NASDAQ position. This position was textbook, and this was totally skippable by something I tell all my students to do in my Discord. Is there is people on social media, on Twitter, I'm not going to say who it is, but there's people you can follow to genuinely get live updates all day long. Now trust me, your phone blows up, but you can get live updates all day long of when Trump is tweeting, when he's saying something, what is going down 24/7. And people that don't do that and just rely on Forex Factory scheduled stuff, you're doing it wrong because you have no clue what's going on in the world. At this point in time, this candle came dumping down because Trump was speaking unscheduledly, and the stuff I tell my students to follow, able to pick up on that and get consistent alerts. And this led a genuine A+ setup that I think mostly everyone took here, a genuine A+ setup to lose because people don't understand that. People are still relying on Forex Factory. So what happened was I was watching this setup. This was a great setup. There's no reason not to take the setup. I was going to take the setup. And I'm sitting here and I have my MacBook open and I am starting to get the alerts through of, Trump saying this, Trump saying that. And you see it absolutely dump. And at that point in time, I'm like, oh, well, I can't trade this now because now you're basing your trade off of whatever Trump speaks. That is a gamble. There's no statistical edge there. I don't know about you guys, but I like my statistical edge in trading. And when Trump is speaking, unfortunately, there is no statistical edge. So I was like, oh yeah, I just literally just put it off my screen. So I was like, yeah, I can't trade it now. And people are completely unknowing of that because they still rely purely on Forex Factory. So they took this trade and this trade just ended up losing. This was all a Trump speech right here. So yeah, that is why I was able to skip that trade as well. And if we go actually further into depth, I believe it was, yeah, this day after. This one I don't have written down. I completely forgot. I'm going to go over it though. Gold, there was a setup on Wednesday as well. I'm going to go over this setup on NASDAQ. There was a short position and markets could definitely chase lower, right? The structure here wasn't too bad. But again, I didn't like this one because first of all, the structure, amazing, right? Beautiful liquidity, beautiful reaction, beautiful break of candle entry. Now, what's the thing with this? Well, it was 8:35. There is this one, it was a scheduled Trump speaking at 9:30. Why don't I like that? What happens, guys? An hour before a major presidential speech like Trump, specifically like Trump, people are out of the markets, bro. There's not a lot of volume going one direction. There's not a lot of volume going the other direction. There is a lot of volume because there's a lot of orders placed, but it's a lot of consolidation until he speaks, right? And there makes no sense for people to have NASDAQ just be buying, just be pumping, or to be absolutely dumping from here. There's no reason because he speaks in an hour. It's all off speculation. People are waiting to see what he has to say that close before the speech. Now, of course, it's different hours before, right? But 1 hour before is that time where more or less you just get consolidation. And I kind of knew that. So I was just like, to be honest, as good as this setup looks, I just see it consolidating until he speaks. So there's a very high chance if it consolidates, you'll get wicked out. And if you took this trade, you're probably able to get out at break even because it started getting really close to his speech. A lot of you guys would have just got out and break even. But what ended up happening? You would have gotten stopped out as he started speaking. And this was all a Trump speech right here. So obviously, there's no trades there. So yeah, I mean, it's as simple as that. You got to have your Forex Factor, and you got to have another source, which I tell my students to use, that literally comes through live all day long of what's happening. And if you're not up to date with that, you're probably losing setups and you actually don't know why. So yeah, that's that setup right there. So let's go over the gold setup on Wednesday. I actually don't remember this setup at all, to be honest. Oh yes, I do remember this setup. This was a setup actually I was almost going to take, I'm not gonna lie. So at this point in time, right, I showed you guys this setup where we're still bullish, but there was imbalances below. I showed you this setup where there was a long, but we're more or less bearish. And there's this setup where it is bearish. Everything's in line, but by the time we got to Wednesday, I still didn't see the price action I wanted, bro. So what was this? This was a small structure trade, right? This was a trade with small structure with nice liquidity, nice internal liquidity, very small structure trade. But the main point of this trade is just to follow through with price action. Now, this trade almost got me, but I did not enter this trade. Two things, intuition a little bit, and at this point in time, there was lots of stacked liquidity, and there was also a very big reason for price to make this wick that it did and chase this price that it did. I told my Discord about that, so I'm gonna let that off of YouTube, but I will tell you, if you go to the 15-minute time frame, this was why I specifically skipped this one. As bearish as it was internally, the only thing I did not like is, okay, price is making lower highs, lower highs, lower highs. This is a great short. Price is making lower highs. At this point in time, we wasn't fully bearish yet. We still had higher lows coming in. All throughout this time, higher lows. And this was the point we were at. Now, I'm not the type to draw patterns, right? But if I draw it out for you guys can get a better, clearer understanding of what exactly is going on. This was what you're doing. So at this point in time specifically, I believe that the setup was right here. Yeah, you're shorting this on a going down. And I wasn't really for that, to be honest. I really wasn't for that because of price still making higher lows, right? Price was not just absolutely dumping with bearish price action yet. And what ended up happening is we ended up pumping a little bit more and was seeking all of this liquidity. And from there, that is when we ended up dumping and followed through with bearish price action. So I did not take that trade. That trade, I was very close. I had actually my order up on my computer. I was very close to that. And I was watching that play out, and it was just those candlesticks was throwing me off. And I zoomed out actually a little bit, and I did notice that. And I was like, dang. And then, yeah, I was like, I'm definitely not taking that. There's also a lot of liquidity right here, and price was really attracted to this area right here. And after seeing that paired with the higher lows, I thought, no, yeah, I'm not taking that trade, and I'm glad I didn't, because that would have been a losing trade there. But again, like, this is the only week that we've had like lots of setups that actually like popped up. So I'm super happy with everything that is popping up right now. So we went over gold. We went over all of these. The only other one we have is a US 30 setup this morning. It was mid. It definitely wasn't a crazy setup. It was just kind of mid in my opinion. This was very early for me. I actually wasn't directly on the charts at this time. This is in my session, but I wasn't actually on the chart specifically at this time. I got the alert. I quickly looked over it, and it's valid, right? And it's valid for what I teach. Structure is bullish, okay? At this point in time, we have really big gap, weekly opening gap. That gap gets filled, and from there, it's bullish. The only thing I don't like about this is, and I told my Discord this, is when you have bullish market structure right here, you can see the structure. You know, you can see the higher highs, you can see the higher lows being formed. You have the structure, right? Whereas down here, you have the bearish structure, right? Internally, you have the bearish order flow in the 5-minute time frame. The only thing I don't like about this is such a sharp move to fill in what? This opening gap, where all it is it's just a big bounce, and it's like there's no 5-minute structure yet. There's no like bullish trending 5-minute structure that's actually, okay, you know, really clean. We have to take opposing liquidity and continue up. There's none of that yet. It's a really big sharp decline. We fill in that weekly gap, and it's a big pump up. And I just didn't see the structure there. So with that, we have a lot of consolidation, okay? And you have a internal higher low, okay? And I don't know what happened there. And then you have price take out your high. This is a valid trade, okay? It just, again, it's valid. It's just, for me, again, there's something off about it, and it could just completely be with the sheer amount of back testing. And yeah, the setup is valid. Like I said, it's technically valid. I can't give you guys 100% reason saying, oh, this is invalid, this is invalid, this is invalid. This is valid for what I teach. Like, this is genuinely valid for what I teach. But as you build Human Edge, you kind of just get a feel for the setups that you like, and you kind of just get a weird feeling for the setups you dislike, even though both setups are completely valid. And I did not like the feel of the weekly opening gap and just the sharp move up, and we just didn't have really any structure yet, you know. Whereas here, you guys can look on the 5-minute time frame, you can see nice bullish structure, right? Whereas this is just a big sharp move up, and it's just sideways movement from here. I don't know if we're going to continue down. I don't know if we're going to really continue up. It's sideways movement. So I really did not like that. So yeah, if you would have taken this trade, you would have gotten stopped out, or you would have taken break even. I know some people in my Discord took it, and they took it for break even. 1 to 4s missed, 1 to 3s missed, mostly everything missed. It was purely because of how big that entry candle there was. And yeah, you can kind of see that final sweep of liquidity on all these highs right here that we manipulated every single high here to the left. But again, like I said, wasn't really crazy technicals wrong with it. Like I showed you in that last gold trade, there's like 3 or 4 things that I just didn't like about it. This trade, there really isn't anything besides the setup's ugly, and I just don't like how we filled that gap with no structure yet. Like, we filled it with a really sharp move up, and then now it's just sideways. I don't know if it's going to continue up, or I don't know if it's going to continue down. There's really no structure for me to judge off of yet. And again, it's just skipping the unclear trades, bro. Like, listen, you guys should be looking at every trade. When a trade pops up, you guys should be looking at every trade and instantly looking for reasons not to take it. I'm going to put you guys on sauce. That is genuinely what you should be doing. And I should probably make a full-on YouTube video surrounding that. Genuinely, every setup that pops up, you should be looking for reasons not to take it. You want to not to take that trade. It's the trades that you're like, damn, I can't really find too many reasons not to take it. It's in trend. Liquidity's fine. You know, this is right, this is right, this is right. You know, I teach a lot of filters in my Discord, and it's like when you're sitting there, you're like, oh, dang, like I can't really look for a reason not to take this trade. This is a valid trade, and you take it. Whereas a lot of you guys are looking at trades, looking for every reason to possibly take it because you want to take a trade. You need to rethink your frame. All of these trades, if you would have taken this garbage trade and hit TP at your 1 to 3, you still would have been negative. If you would have hit your TP at 1 to 4, you still would have been negative this week, just taking all these trades, you know? And these are all roughly the same quality of trades. So that's it for it, you know? That's all I got for you guys. Is literally, that's the setups that popped up this week. That's why I skipped. Some of them had a lot more reasons. Some of them had a lot less reasons, and a lot more intuition. And it was a great week. I'm actually really happy with this week. Even though I did not take any trades, I'm really happy with this week. I do know a lot of other people teaching this strategy and that are big in this strategy name, teaching the LSD. They are down a couple percentages, a pretty hefty bit this month. And I'm just thanking God that, you know, he has, you know, given me the actual effort and the work, effort to put into backtesting to collect all this data and to reframe my thinking to understand how to trade better. Because, you know, I'm trading the same entry model, but purely better off of seeing the setups play out more and more and more, and having a couple filters that actually completely make sense for the strategy that I teach. And that allows me to just cut out these trades, bro. Like, just purely cut out these trades. And it does. It turns, you know, a losing month into just a normal month of taking no trades. You know, is it slow? Of course it's slow, but it's also always better for it to be slow than to have, you know, consistent, you know, losing streaks and losing streaks. So I'm very thankful, you know, and that's pretty much it. That's the 3rd week of June, boys. It's been slow, but like I said at the beginning of the video, I gave you guys a full breakdown on the whole reasonings of these. So if anyone's telling you that, oh, the war doesn't have any deal with 5-minute scalping, yes, it does, bro. Yes, it does. Yes, it does. You guys need to learn economics a lot more and realize the effect that it's having on these. And if you guys would have the data on all of your pairs, then that would help as well. I guarantee you, none of you guys even probably have a full year of 5-minute data on each and every single pair you trade, let alone 4, all combined. And I show all my students that as well, and I think it wakes up a lot of people, because it's like, dang, you see that data, you start realizing to yourself, wow, like I really have nothing. You know, the data I have, you know, the 6 months I have on oil, it really means nothing. And it does mean nothing, bro. Like you need a lot. You need a lot, and you need it in, you know, a folder, and it's like, this is my edge. I see it play out. I see it play out live markets. This is my backtesting edge. No one can take that from me. I need to study this as much as I can, and I know what to look for in the market, and I know what not to look for in the market. That's the biggest thing that helped me, guys. So that's pretty much it for this recap. And yeah, from here on, I have a lot of psychology videos, a lot of talking videos that are scheduled out. Very good videos. I mean, like really good videos. Like genuinely, I poured my heart out into some of these videos, bro. Like really good videos scheduled up. I'm really excited. But I pushed some of them a little bit back because I wanted to give you guys this weekly recap, and I want to give you guys some charts. So that's it for this week. If you guys have any recommendations, if you guys want to see anything, if you have any questions for me, comment, bro. Please comment. I will always reach back out to you. I will always, you know, if you guys have any requests, I will make any video. But yeah, that's pretty much it for this one, guys. I appreciate you for watching, and hope to see you guys in the next one.